Always a delight to have you on. I am Pius Kojo Baka. To our very first story, credit risk remained elevated during the third quarter of 2023, reflecting the sharp increase in the stock of non-performing loans in the banking industry. That's according to the Bank of Ghana's latest monetary policy report. This translated into a higher NPLs ratio. Here's more.
According to the Bank of Ghana's monetary policy report, the stock of gross loans and advances contracted between October 2022 and October 2023. This reflected a slowdown in new lending by banks. Therefore, gross loans declined by 9.5% to 73.5 billion cedis at the end of October 2023, compared to 57.5% growth in October 2022. The decline in gross credit reflected contractions in both components. While private sector credit shrunk by 7.5%, public sector credit declined by 27%. In terms of sector distribution, credit to the service sector was the largest, accounting for 34.1% of total credit at the end of October 2023, compared to 32.2% in October 2022. The commerce and finance sector came second, with a share of 22.6%, up from 20.5% in October 2022. The mining and quarrying sector was the lowest recipient of total credit, with a share of 3%, up from 2.2% during the period under review.
On to one of our big stories we are following up for you. GOIL Upstream Ghana Limited, a subsidiary of GOIL PLC, has finally found a partner for the Deepwater Cape 3 Point oil block, which was abandoned by U.S. oil giant ExxonMobil in 2021. Now, for over 2 years, the Ghanaian oil firm has been searching for a partner for the oil block and luckily found a Dubai-based Planet One Group as its partner. Let's have a discussion on the back of this as we've been joined via Zoom by energy strategist Dr. Yusuf Sulemana, who's also the CEO of Eureka Energy. Thanks so much, Dr. Sulemana, for joining your time here on Business Live, and good to see you once again. Now, this deal was originally between GOIL and ExxonMobil, if I recall. Now, GOIL has a new partner because ExxonMobil pulled out. Do you think the Planet One Oil and Gas Limited is fit for this role?
Yeah, thank you very much. Good evening to you, Pius, and to your cherished viewers in Ghana and across the globe. Indeed, Planet One, if you look at their credentials, I mean, it's early days yet to say whether they are fit for the job or not. If you check, though they are within several areas, especially to the natural resource, and oil and gas is just one of them, especially in the upstream. So yes, I think they have been also in the business. They've had some projects within the business space. And so it is only fair that we give them the chance for us to see what they can deliver. And that's number one. Number two, Pius, we are looking at fields where we have competing investment between well of hydrocarbon and that of green energy. And you know, the push for green energy is pushing a lot of capital constraint to the well of hydrocarbon. So on that score, so it wasn't surprising that ExxonMobil exited, and then we hadn't had anybody coming in. My understanding is that ExxonMobil was coming back, but if you're having another player to partner with GOIL and other players to explore the field, I think that's something welcoming. It is early days yet, but I think it's good we give them the chance to see what they can do. And then the third aspect of it of this is Pius is the fact that Ghana, our upstream there's been some inertia within the upstream. And then you can understand, after a decade of oil production, you see that we are even struggling to cross 150,000 barrels of oil per stream day. Until the late coming in of GEC, that is Jubilee Southeast project, as part of the Greater Jubilee, we were struggling even below 150. And so oil prices around 70s to 80s, and we are just doing 150. I think we are losing a lot, and there's opportunity to explore more fields. So that's a welcoming news, Pius.
And from your initial assessment, do you think that is a good partnership that will be financially viable for Ghana, you would say?
Yeah, for sure. Once we are able to bring in, once we're able to churn out a hydrocarbon product, there are two things that we can look at. One is the financial wherewithal, as you've mentioned, and the other one is the technical know-how. You know, these two things are key. You know, to having a strategic investor who will be credible enough to champion your cause. And if you watch, I mean, they clearly stated that they have what is required. Though I can say that they are not among the big systems or big seven systems that we normally call. They are not among the Exxon, they are not among the Chevron, the BP, the Total. However, there's always an opportunity to show yourself, to show what you're worth. And if they can't actually go through Ghana field, it's a difficult field, Pius, let me state it. A deep water field is something that requires a lot of technology and capital know-how. So if they have this, which they've stated clearly that they have, then I think it's something that we can watch to see and hoping that they can deliver. And I think it's also very huge for them to be able to deliver something that will open more opportunities, for them even in Ghana and other fields, Pius, or within even the sub-region. Yeah.
I don't know what your thoughts are on this, but do you expect the deal to go back to Parliament?
For sure, it's supposed to have been a straightforward one, but of course, if it's possible, if Parliament requires that it goes back, for them to make a second scrutiny, it's not out of place. So I expect that for transparency's sake, if that is a requirement, I felt that it's a straightforward one, because what is different between the former one and this one is just that I think our stake has been increased by 5%. Earlier on, Exxon was taking like 80%, and we're supposed to take 20%, with 5% going to GOIL and then 15 to our NOC. And if you look at this particular one, I think 5% has been added. Our understanding is that Ghana is going to take like 25%, and the players will take like 75%. So I always call for the fact that we always wish to have larger or huge stake, Pius. But in this business, if you don't invest, you don't expect to have a maximum share. So yes, I think it's pretty fair. If they want to send it to Parliament, I don't have any qualms with that. Of course, that will even increase transparency with respect to this deal, especially the fact that, Ghana, there's now a huge call for transparency in that space. And I think if Parliament requires that it comes, then why not? That should be the way to go, Pius.
All right. Thank you very much, Dr. Yusuf Sulemana, for your time here on Business Live. He's an energy strategist and also the CEO of Eureka Energies there. Now, some business groups and civil society organizations have criticized the country's value-added tax system, saying it doesn't promote fairness and equity in the payment of taxes. They lament the inability of the Ghana Revenue Authority to widen the tax net has overburdened few businesses. President of the Ghana Union of Traders Association, Dr. Joseph Obeng, is leader of one of the concerned groups. He spoke to Joy Business at a workshop organized by the International Budget Partnership on Tax Equity in Ghana. Now, there is more for you in this report. In a bid to address tax equity challenges in developing countries like Ghana, the International Budget Partnership established the Tax Equity Initiative to help civil society actors build ties with diverse stakeholders to influence domestic tax reform. The Tax Equity Project is to enhance civil society's capacity to engage and influence domestic tax policy and administration to promote tax equity. Speaking to Joy Business at a National Stakeholders Forum on Tax Equity in Ghana, President of GUTA, Joseph Obeng, raised concerns about the country's VAT system, saying it has overburdened few businesses who are compliant.
It's very important that taxes are made to be uniform. That will ensure fairness, and that we are talking about equitable distribution of taxes and all that. There is an clear example, the VAT, as it's structured, is not helping compliance at all. And that is not conducive for trading or business activities. That need to be restructured. You've heard on so many uncountable times that Kumasi is on demonstration, Abusuka is on demonstration, and all that. And we have appealed on so many times that the tax as it is now is not helping those people who have actually registered to pay the taxes.
He ever called on the GRA to take the bold step by widening the tax bracket to enhance revenue mobilization.
We have to think outside the box and make sure that we bring in a lot more people who also deserve to pay these taxes. And there are many. And why are we not trying to do that and then just pile up the taxes on just a very few identifiable one who otherwise have the potential to grow? We are crippling their growth.
On his part, tax policy analyst at the International Budget Partnership, Dr. Alex Ampabeng, called for more collaboration between government and civil society groups on best ways to achieve tax equity in the country.
For the recent issues around the tax base calls for the need to have a broader conversation around tax equity. Not long ago, we had a luxury vehicle levy removed because of equity concerns. We had the e-levy, which was introduced just over a year ago, having so many concerns on equity issues as whether it's actually being fair on the poor.
The Stakeholders Forum was on the theme Promoting Tax Equity in Ghana, the Role of Key Stakeholders. For Joy Business, Pius Kojobaka. Away from tax matters, let's talk food-related stories. And Ghana has been ranked as the 5th country in the world with the highest food inflation. That's according to the latest World Bank report on food security around the world. George Yafe reports.
The World Bank report tracks what the institution calls real food inflation rate, defined as food inflation minus overall inflation of the country from August to November this year. It tracked the growth in food inflation rate from November last year to November 2023. At a rate of 10%, growth in Ghana's food inflation rate was higher than that of Zimbabwe, Burundi, Malawi, and Belgium. But if this report tracked inflation rate from August to November this year, then there's a likelihood that it didn't capture the recent movement which showed that overall inflation has slowed to 26.4%. This is because the November inflation rate, as announced by the Ghana Statistical Service, will be the rate for the previous month. Meanwhile, the report showed that the World Bank, under its Food Systems Resilience Program, had approved some $315 million to support Ghana and 2 other countries to help improve food security.
Now, a while longer in the industry, because despite the agricultural sector recording the highest growth rate of 5.9% in the 3rd quarter of this year, there are concerns that the sector could have done better if farmers have received enough farm inputs. Now, according to them, the performance could be attributed to good rainfall this year. Let's have a conversation on the back of this and, of course, the agriculture sector's performance. And joining us by phone to do that is General Secretary of the General Agriculture Workers Union, Edward Kariwe. Edward, thanks so much for joining me on Business Live, and Merry Christmas in advance to you. First off, what do you make of the performance of the agricultural sector?
Well, let me say good evening to you and good evening to those who are watching and listening to us. Well, relatively, it's better than the other sectors of the economy.
Yes.
And I'm saying relatively, it's better than the other sectors of the economy, and that is good.
And was that expected, you would say?
Come again?
I'm asking whether it was expected that we'll see the impressive performance of the agri sector.
Well, we expected it to grow better than this, and as it was indicated, it depends on the level of investment we have put in it. And it is our best sector that the least effort we put in agriculture will get better returns than any other sector.
And what do you think for you must be done to sustain this trend going forward?
Well, it requires more investment, making sure that budgetary allocation to the sector is actually gets to the stakeholders or the target group. And then also to ensure that any other factor that destroys agricultural infrastructure is abated. For instance, if we take Galamsey like this, it's one area that is also destroying agricultural infrastructure. So if you even invest more in agriculture by way of resources and so on, yet you are unable to address the effect of Galamsey, then of course it will reduce the impact of the investment that is put in. And again, we also have to ensure that we increase manufacturing part of the agriculture, that's agro-processing, so that all that we produce can be processed. Otherwise, we produce enough and we will not be able to process it. and it will go to waste.
Not too long ago, I played a report by the World Bank ranking Ghana as the 5th highest food inflation. Are you surprised by that? And really, what should government do to deal with this food inflation challenge we are facing?
I'm not surprised, and I even think that Ghana is likely to be only the 5th in the list. It could have even been lower than that. So it's a reflection of our agricultural sector, and that one all of us are aware. For some years now, that is 2-3 years, food inflation has been over 50% of national inflation, telling us that our large proportion of our inflation is caused by food inflation. So the ranking is not surprising. What we need to do is that if we think that inflation is not good for our economic growth, high inflation, and our current inflation, if we are not in tune with it, then what we need to do is to simply invest in agriculture, reduce the inflation in agriculture, and then we'll have a manageable inflation. But until we invest in agriculture to reduce the food availability, food insecurity, of course, our food inflation will continue to be high, and then food insecurity will also increase.
Thank you very much, Edward Kariwe, for your time here on Business Live. He is the General Secretary of the General Agricultural Workers Union. You're still watching Business Live. We are pausing for a breather. We'll be right back with more. Hello, welcome back to Business Live. PBC Limited has cited cash flow deficits and continued reliance on short-term loans as a cause of its major loss in the year 2022. The company recorded losses before tax of 29.7 billion cedis in 2022, despite registering a gross profit of 64.7 billion cedis. At this 18th annual general meeting, chairman of the company, Yao Ejimandia, said the company has decided to divest its interest in some of its fixed surplus or underutilized assets to raise funds and cut costs. Here's more.
PBC Limited says it has plans in place to restore the company to profitability after its 29.7 billion Ghana cedis loss in 2022. Additionally, the company is hoping to raise 1.5 billion equity from the Ghana Stock Exchange. Speaking at the company's 18th annual general meeting, chairman of the company, Yao Ejimandia, said the company can turn around its fortunes in 3 years with the 1.5 billion cedis equity financing.
The company recorded losses before tax of 174.447 million Ghana cedis, 146.881 million Ghana cedis, 7.438 million Ghana cedis, 5.64 million Ghana cedis, and 29.7 million respectively in 2017, 2018 through to 2021, 2022 financial years, respectively.
It's been accumulative, so much longer. But if we get it, I believe that within 3 years, we would be able to turn things around. You see, if we get it, things will be, you see, you have losses and it will start dropping. Then it drops, it will drop. Now we are almost at the bottom. So if we get this within maybe 3 years, together, it's not just the money. We are going to do a lot of things, which will all help. That you do them together, that's what will help.
Managing Director of the company, Kwekun Kansa, said they would put in place stringent measures to increase volumes of purchases to enhance its revenue.
The company has increased its agility in the area of cocoa sustainability and certification and has engaged some industry players. We shall continue to increase this to improve farmer-company relations and financial incentives. The Board of Directors and management will continue to dialogue with the major shareholders to ensure that all outstanding issues relating to equity capitalization are resolved. The company will continue to put in place the needed strategies to improve its operational capacities and efficiency, to increase its market share, increase volume of purchases to enhance its revenue, and boost its profit levels in the years ahead.
The company has, however, changed its name from PBC Limited to PBC PLC.
The National Insurance Commission says it is open for collaboration among other industry players on how it could push for inclusiveness within the sector. Acting Commissioner of the Insurance Commission, Michael Kofi Andor, emphasized the importance of collective efforts by stakeholders in the insurance industry to establish sustainable safety nets that empower vulnerable communities. He was speaking at the launch of Women in Insurance Network for Ghana.
WING is all about celebrating, inspiring and empowering the women in Ghana's insurance industry. WING is here to shape mindsets, welcome fresh faces to the industry, and make sure every woman in any role has a fair shot. As an industry, we stand to gain tremendously from embracing diversity, inclusivity, and equity. Let us commit to diversity not just on paper, but in the real world. A diverse workforce brings together individuals with different backgrounds, experiences, perspectives, and problem-solving skills. This diversity of thought fosters creativity and leads to innovative solutions. Diverse teams are more likely to generate fresh ideas and develop unique approaches to challenges.
And that's all in this package by way of Business Life. I am Pius Kojo Baka. For more stories, do log on to myjoyonline.com/business. Do enjoy the rest of our programs. Always a delight serving you. Bye.